This is chapter 6, activity-based costing. And what activity-based costing does is it provides you with more strategic cost information than the costing methods that we've talked about before. We've talked about variable costing and we've talked about absorption costing. And if you remember, variable costing differentiated between variable costs, costs that change with volume, and fixed costs. Absorption costing included fixed manufacturing overhead or fixed manufacturing costs, manufacturing overhead cost in the cost of the products. And that was a little weird because fixed overhead doesn't change. So it's a little deceptive to think that the more units you produce, the more overhead you have, because fixed overhead doesn't change even if you make more goods. So that was a little tricky, absorption costing. But absorption costing is in fact generally accepted accounting principles. What I'm going to talk today about is another costing method called activity-based costing, or ABC. And the whole idea of ABC is to provide you with cost information that is a little more predictive of how costs behave. And the reason why that's valuable to have is because it can help you to make decisions about what products to make and how to make your products and how do you serve your customers and so on. Because the cost information that we would get from variable costing and from absorption costing tends to be problematic. So activity-based costing can really help managers to make better decisions about which products to make, how much to charge for those products, and a lot of specific decisions about how to run their company. So you should know going in that activity-based costing, this is kind of a cheesy little slide here, activity-based costing is not GAAP, generally accepted accounting principles. There are kind of ways to adapt it to GAAP, but it's not quite GAAP, and therefore it's something to think about as an additional costing method to use. The good thing about it is that if you use it properly, then it can really help you to make decisions that are going to make your company more profitable. So learning objective 1 is to understand ABC and how it differs from traditional costing systems. And a traditional costing system would take your manufacturing costs and it would only apply product costs to the products it only would apply manufacturing costs to the products that you make. Remember, we had product costs and period costs. Product costs, which are manufacturing costs, are applied to the cost of products, and all other costs are not applied. They're considered to be period costs, and therefore they go to straight to the income statement as an expense. And one thing which activity-based costing does is it applies both product and some period costs to products. So in other words, you may have costs in addition to manufacturing costs that actually have everything to do with the products that you're making. But according to GAAP, they're not manufacturing costs, so you treat them like period costs. So what we're going to do is we're going to treat some non-manufacturing costs as if they were product costs. And there are also situations where manufacturing costs are not applied to products under ABC. So under ABC, in some situations, you may have manufacturing costs. This picture here doesn't make any sense. But anyway, listen to what I say and don't look at this slide, because the slide, I have no idea what they're trying to say here. I'll explain it a little more in a moment. ABC does not apply all the manufacturing costs to products sometimes. If ABC says that this particular manufacturing cost is organization-wide or customer level, then it's not applied to products at all. The real difference between ABC and what we've been doing up until now is that we've had a single overhead rate. And that was, if you remember, the predetermined manufacturing overhead rate. And that was the total overhead costs divided by some kind of activity base. And what activity-based costing does is it establishes several different pools of overhead. In other words, it'll take your total overhead and split it into several pools, and then it will apply each pool of overhead in a different way. And the way it applies the cost is supposed to reflect cause and effect, so that the more cost that a particular activity causes to happen, the more cost you apply to that activity. So costs go along with activities that drive those costs. So ABC, whereas traditional costing had three cost pools, if you remember, it had direct materials, direct labor, and manufacturing overhead, and it had a single manufacturing overhead cost pool. What activity-based costing does is it creates several costing pools depending upon what you perceive cost-effect relationships to be. So traditional cost systems, which is what we've been talking about, is going to create a single pool of overhead and apply it based on direct labor hours, machine hours, or maybe direct labor cost. And apply all the overhead using that single measure or that single rate. What ABC does is it creates several different cost pools and applies them based on different rates. And what we want to do is we want to apply them based on some measure of activity that actually causes the overhead to happen. So for example, if you have a shipping department, then perhaps the level of activity would be the number of boxes shipped. So if you have shipped one box, that gets some overhead. If you make a shipment of 20 boxes, that's going to get more overhead. And that's how you would allocate overhead for shipping. And you could create a lot of different pools and allocate the overhead for each pool using a different rate. Now what we're going to do is we're going to identify different activity measures, and for each activity measure, we're going to create an allocation base and then use something called a cost driver to refer to that activity measure, because the cost driver is what you think causes the cost to occur. And the book likes to talk about this, transaction drivers versus duration drivers. Sometimes you have things that are just based on a count of something, like how many of something there is. And sometimes it could be based on the amount of time something takes. So in summary, activity-based costing uses several predetermined rates to allocate different pools of overhead to products. And the rates should reflect cause and effect. They could also be used to allocate non-manufacturing overhead. And that's one of the really nice things about ABC costing, is that it not only uses manufacturing overhead, but it can also consider non-manufacturing overhead, like selling and administrative costs. And the idea here is that a certain type of activity causes you to use more overhead. Up until now, we've just been talking about overhead as something that exists, and we want to cover it. But in fact, things cause overhead to happen, and we want to know what causes the overhead to happen, and then those become our cost drivers. So what we'll do is we'll take our overhead, and this could be done just from manufacturing overhead, or it could be done for all your overhead, and we're going to take that overhead and we're going to split it up into pools. And for each pool, we're going to identify some kind of activity measure or cost driver. I like the term cost driver better. And then that's going to be what drives that cost. And we'll establish an allocation base. I'll talk about how to do that in a few minutes, and with a lot of specifics so this is a little more clear. And create an activity rate. So whereas previously we had a single predetermined overhead rate for all overhead, usually direct labor hours, machine hours, or direct labor cost, now we're going to have several cost pools. Each one is going to have its own thing. It could be, again, direct labor hours, machine hours, number of units produced. It could be a lot of different things. And then we'll create a rate for each pool, so that we'll have several pools of overhead that will be allocated separately. Now, these could be done at 5 different levels. So previously, we were just saying it's direct labor hours, and they're going to go to whatever we're making, units produced usually. We could do these to unit level, in other words, 1 unit at a time or in groups of units, to what's called batch level. Oftentimes what happens in companies is that, especially in manufacturing, is they make batches of things. So for example, your textbook, what they probably do in the printing factory is one day they'll make one textbook, and the next day they'll make another, and they'll produce them in batches. Product level would be for all of a single product. So what we would do is if a company makes 30 different products, then we would want to keep track of costs according to product. We could also establish activity by customer level. Customers require certain levels of activity. And so what we may do is we may apply overhead to customers so we have an idea of how much different customers cost. And there's also a very important idea in activity-based costing, and this is that this is the idea of organization sustaining activities. There are some costs that can't be allocated. They can't. So when you have those costs, then there's no point in trying to allocate them. You're just going to add them up and stick them on your ABC income statement as one number and not attempt to allocate them to individual products or jobs or anything like that, because they can't. So we're trying to establish here some kind of cause-effect relationship between the cost and the item, so that the more of a certain activity that happens, the greater the cost that we're going to attach to that. And with the hope that if we don't do that thing, then the cost probably isn't going to happen either. So if I don't make 100 widgets, and I'm not going to have to pay somebody to make the widgets, and I'm not going to use the material. Likewise, if I don't make the widgets, then I'm not going to use a certain amount of overhead. So we're establishing now a cause-effect relationship between what we're doing and the cost that we're applying to that item. So there are 5 steps to ABC costing, and there are different approaches to doing this. One is to define activities, activity cost pools, and activity measures. That's basically to set things up. Then, to assign overhead costs to activity cost pools. What this really means is taking all of your overhead and splitting it into these pools. And I'll take this again step by step. 3 is to calculate your activity rates. 4 is to assign overhead out from the pools to cost objects using these activity rates. And then 5 is to prepare your reports. And the idea here is to create reports where costing is much more closely related to activity and cause-effect relationships within the company. ABC is not easy to implement. And in fact, I've been part of a process with one particular company where we have been implementing it. And it's a service organization, not a manufacturer. And it took about 3 years of planning. And then we're going to run ABC in conjunction with our regular system for 2 more years before we do anything with it at all. So the idea is that we want to have a better idea about how different segments of the company, how much they cost and how much money each segment makes, and then use that information to make better decisions about how to manage the company. So successful implementations usually get strong support from management. A lot of people from a lot of places throughout the company are all involved and are able to work on this together. And they say here link to evaluations and rewards. I'm not so sure that's true, actually. It says it here. I mean, if it's in the PowerPoint slides, it must be true. But I'm not sure I really buy that. So for the content from the book, for steps 1 and 2 at least, I'm not going to actually do them in front of you because there's really nothing to do here. I'll just explain what each step involves. And then step 3, I'll do a little bit more on paper so you can get a sense for how it's done. But here you can see an income statement for classic brass. And again, if you haven't tuned into previous videos, this is right out of the book. I don't have a copy of the book right here, but this is right out of the book. So you can open the book to chapter 6, and here's the example. And I'm going to walk you through the example from start to finish. If there's anything you don't understand, you can open up the book, and it's also explained over there. This is just an income statement, the way we do income statements. And you can see here sales, cost of goods sold. There's an assumption here to keep everything simple. They sold everything they made this year. Just an assumption. You can see manufacturing overhead is $1 million. So total cost of goods sold was $2,326,250. Gross profit or margin is $873,750. Then you have your selling and administrative. Shipping is $65,000. General administrative is $510,000. Marketing is $300,000. So the total selling and administrative expenses are $875,000. And that would mean that they have a net operating loss of $1,250, which isn't good. And we'll explore a little bit about why they had a loss. What we want to do here is point out that manufacturing overhead is $1 million, but there's other kinds of overhead too. And until this moment, I've just been talking about overhead as if it's all manufacturing overhead. And in fact, there's other kinds of overhead. There's selling and administrative expenses. So general administrative expenses are overhead, but not manufacturing, and they're period costs. And the same thing goes for marketing expenses. Marketing expenses is overhead, but it's also not a period cost. It's not a product cost, it's a period cost. And so it's never included in the cost of the product because you don't need marketing expenses to make your products. But you should note here that total overhead is not just the manufacturing overhead of $1 million. It's also general administrative expenses of $510,000 and $300,000. So that's $1,810,000. Now for step 1, the first thing to do is to define your activities, your activity cost pools, and activity measures. In other words, what you're going to do is you're going to figure out how to split up your overhead into different cost pools, which are then going to be allocated in different ways. So I'm going to set up 5 cost pools in this situation. I say really the book. One cost pool is called customer orders. Another is called product design. Another is called order size. Another one is customer relations, and another is other. So for example, with customer orders, I have a department that takes customer orders. So I'm going to take all the overhead costs related to that, and I'm going to put that into the customer orders department. Put them into the customer orders pool. Same thing with product design. I have a product design department. Several people work there, or maybe several consultants, I don't know, who I pay by the hour. And I'm going to create a new cost pool called product design. Same thing for order size. There's a certain amount of overhead that goes, the bigger the order and the more overhead that goes with it, supposedly. Or customer relations. I have a customer relations department. So I take all the costs of that customer relations department, or cost that's related to customer relations, and I put all those together. So I should be able to take all my overhead, which in this case is $1 million plus $510,000 plus $300,000, $1,810,000, and split it up into these 5 pieces. And I determined that customer orders, the best driver of that is the number of customer orders. So the more customer orders you have, the greater the cost of the customer orders. Same thing with product design. Let's say I have a certain number of designs to make. The more designs you have to make, then the greater the product design cost. Right? It sounds, at first this probably sounded really hard, and now you're like, oh wow, this is really easy. Anyway, customer relations the same way. The more active customers you have, the greater the cost of customer relations. And then there's other, and that's kind of dark and ominous, but it's very simple. These are costs that don't have a driver, okay? It's just part of the cost of running the company. I can't think of anything that causes it to go up or down. It's just there. It's called an organization level cost, and I'm not even going to try to allocate it. The next step is to assign costs to cost pools using a first stage allocation. So to do this, we go to step 2 and assign overhead costs to activity cost pools. So let's look at our overhead costs for a moment. Here you can see a summary of overhead costs. We have 3 different departments that are incurring overhead, and this adds up to 1810 because we said total overhead was 1810, but now we're breaking it down. So we have this production department, the $1 million that was in cost of goods sold, consisted of 4 components. General administrative department consisted of 3 components: administrative wages and salary, office equipment depreciation, and administrative building lease. And the marketing department had 2 components. So marketing wages and salaries and selling expenses. So total overhead cost was $1810. And what we need to do now is we need to break this down and allocate these to the activity cost pools and figure out how much of $1810 is going to go to customer orders, how much to product design, order size, and customer relations. So what the company did was it went to each department and it interviewed the people who work there and to try to get a sense of how much time they spend doing different things. So, for example, in factory wages, indirect factory wages, 25% is dedicated to customer orders, 40% to product design, 20% to order size, 10% to customer relations, and 5% to others. So one item is factory building lease. They've determined that the entire thing is other. Another thing to look at here is, let's see, marketing wages and salaries is mostly customer relations, 60%. Selling expenses, 70% of that is customer relations. So they've taken each department and they've broken down in percentage, and this is just a logical way to go about figuring out how you're going to apply these, how you're going to split up your overhead into the overhead cost pools. So someone ran around and they went to every department and they came up with these allocations, and then they allocated the costs in this way. So for example, total indirect wages, indirect factory wages is $500,000. And someone determined that 25% of that belongs to custom orders. So 500,000 times 25% is 125,000, and they applied 125,000 to customer orders. So each row is one different aspect of our total overhead, and each column is a cost pool. So we determine that this $500,000 worth of indirect factory wages, based on the percentages that I came up before, 125,000 of that is customer orders, 200,000 is product design, 100,000 is order size, 50,000 is customer relations, and 25,000 is our favorite category, other. Remember how the entire factory building lease went to other? Here you can see it. It was $80,000. See right here, it's $80,000. And here you can see $80,000 applied to other. And then we add up each activity cost pool and we come up with a total piece of overhead. So of $1,810,000 worth of overhead, $320,000 is going to go to customer orders, $252,000 will go to product design, $380,000 will go to order size, $367,500 to customer relations, and $490,500 will go to other. And that's how we're going to split it all up. Now, you were probably looking at this and asking yourself, well, there's probably a lot of different ways. There's a lot of steps here. The truth is that this is one way to do this, and there are a lot of different ways to go about doing it in the real world. The whole idea is you basically want to split up your total overhead according to the cost pools, into the cost pools. And this is the way they happen to do it in this example. But there are a lot of other ways to do this depending on the company. Every company is a little different, and so every company could go about this process a little differently. There's no generally accepted accounting principles, basic rules you have to follow or else you go to jail. So this is the way they did it in this example. But other problems, homework problems and things like that, may find other ways to go about doing this, And so you want to be very flexible and think of the big picture here. Again, what we're trying to do is break up total overhead, manufacturing and non-manufacturing costs, break it up into the individual costs. So now, learning objective 3, let's compute activity rates for cost pools. And this is going to be similar to the predetermined overhead rate that we've seen before, except that there's going to be a separate rate for every pool. So here, for example, we have, if you remember, customer orders were $320. I'm just going to write these in because this wasn't actually in this spreadsheet. Product design from the previous page was $252. Order size was $380. Customer relations was $367.5, and other was $490,500, and it adds up to $100,810. So this is how we broke up our cost pools in the previous step. The next step is to figure out how we're going to allocate the rates at which we're going to allocate each one. So we said in step 1 that we were going to allocate customer orders based on the number of customer orders. Sounds obvious, right? So there are going to be 1,000 orders, or there were 1,000 orders. This doesn't have to be predetermined this time. So that would mean that each order is zapped $320 worth of overhead. We are going to do 400 designs. So the total product design cost is $252. Divide that by the 400 designs that you do, and you get $630. Let me just go back a little bit about predetermined and not. With BACC and with absorption costing, you use a predetermined overhead rate. With this, you might go back and do it for last year because you want to see what happened and you want very accurate measures. So we're usually not going to use predetermined rates, but we're actually going to use the numbers from the previous year and try to make this as accurate as possible because we want to use this to predict the future. Therefore, we're not going to be so concerned with overhead under or over allocated as we were before. And we don't have to do overhead under or over allocated because we're not doing GAAP financial statements anyway. ABC isn't GAAP. We're using this for management purposes. In other words, from this you know that each design costs $630. So if a customer says to you, "Can I have a custom design, please?" the first thing that you think to yourself is, that's going to cost me $630. Okay, I need to keep that in mind. Order size, total cost in this pool is $380,000, and we determine that this is based on machine hours. So each machine hour is going to cost $19 with respect to order size. Customer relations is per customer. So every customer we deem to cost $1,470, and other can't be allocated, so we're not even going to bother. So these four are going to be our allocation rates. And then we can look at any cost object, let's say a set of orders or something like that, a specific product, something, and it could be a lot of different things. Apply these activity rates to them and figure out how much they cost. And we can usually do this to get a much more accurate measure than variable costing or absorption costing. This Exhibit 6.8 I think is very helpful because it provides you with a handy summary of what's going on here. We're talking about allocating overhead. So this is the $1,810,000 that we're talking about here. And we split it into these pools, and we're going to apply the pools at $320 per order for customer orders and so on. We also got others. But don't forget that this is just overhead, okay? It is manufacturing and non-manufacturing overhead, but it's just overhead. You have other costs. For this particular company, you have direct materials, direct labor, and shipping costs. These are all traceable, so we're not going to worry about them here. But we got to keep in mind that it's not just materials and labor, it's also overhead. In this case, for this company, it's also shipping costs. Next, we're going to do the second stage allocation, also known as step 4, assign overhead costs to cost objects. So we're now at step 4 template in the spreadsheet. And this is step 4, assign overhead costs to cost objects. For this particular company, this is the company in the book. And by the way, I'm sure that if you're watching these videos, you are a smart person. You're not a dummy. But I'll just add, this is not a commercial. It's not, I guess it is. It's a shameless plug. I have a book. And in the book, I explain how to do this and many other things in managerial. You're smart, but if you want to look at Managerial Accounting for Dummies, this is my book. Chapter 6 explains all of this in lovely detail. So you can just turn through this book here, Chapter 6, and it's got most of the other topics in this book. I also have available an index from our book and course to this one. So you can always take a look at this. It's Managerial Accounting for Dummies by me, and you can put me on the shelf. So we've got 2 products here. We've got standard stanchions, whatever a stanchion is, I don't know, and custom compass housings. And what we want to do here is you want to allocate our overhead to these 2 products to figure out how much they cost. So standard stanchions, a little bit about each one because we need to know this, requires no new design resources. There were 30,000 units ordered in 600 orders, and the machine hours used to make standard stanchions were 17,500 machine hours. Custom compass used design resources of 400. In other words, there were 400 redesigns for custom compass, 1,250 units ordered, and 400 orders. And just to clarify, every order had its own custom design. That's why it's custom compass housings. And 2,500 machine hours went into custom compass housings. So what we're going to do here is we're going to take all the costs of this company and split them into their 2 products, standard stanchions and custom compass housings. So let's look at the different activity cost pools and figure out exactly how this is going to work. If you remember, the cost pools were customer orders, product design, and order size. But you're saying, what about customer relations? Customer relations, remember, is not a product level cost. So it doesn't really apply here. Remember, we had these different levels of activity. This applies to units and batches and product level, but it doesn't apply to customer level or organization sustaining costs, because we don't really know what's going on with customers or organization sustaining, so we're just not going to get involved in those cost pools right now. They're not relevant to what we're trying to do. So customer relations and other is not going to be part of this problem yet. So the activity rate for customer orders, if you remember, was $320 per order. For product design, it is $630 per design. And for order size, it is $19 per machine hour. And again, let's just clarify customer relations. Customer relations, the problem doesn't say anything about customers at all. We don't know anything about customers, and we're just not going to go there with this problem because customer orders it's a completely different issue. How many customer orders did we have? 600. How many products were designed? None. And what was the order size? There were 600 there were 17,500 machine hours. So therefore, the cost would be, out of the customer order cost pool, it would be $192,000. Product design would be 0 because we didn't have any designs. Order size would be 19 times 17,500 or $332,500. So the total cost of making standard stanchions was $524,500. Customer Compass Holdings, I'm going to use again the same information here. That didn't work. And how many customer orders did we have for Custom Compass? We had 1,250 orders. We had a lot of designs, right? We had 400 designs. And we had only 2,500 machine hours. Therefore, the cost would be 320 times 1,250, 630 times 400, and 19 times 2,500. The total cost would be, this doesn't look right actually. We had 400 orders. There you go. 400 orders at $320 each, $128,000. So here you can see the relative cost. Overall overhead, $524,500 would go to standard stanchions, and $427,500 would go to Custom Compass. And again, we did not assign customer relations other to this. So we can break this down in this way. This is a nice chart here. We can break it down in this way and see how much of each overhead pool went into standard stanchions and Custom Compass. And then we add in, so that was a total of $952,000 in overhead allocated. But we've also got to add in customer relations and other. If we add those overheads in, the total overhead comes to $1,810. And remember, we still have direct materials, direct labor, and shipping cost. And we just haven't done that yet. So total overhead here is $1,810, which is right. That's the total overhead. And now you can see how much belongs to standard stanchions and Custom Compass Holdings. This starts to get useful when we can calculate the margins on different products or whatever our cost object is. So what we're really trying to do is get a sense of how much things cost. And so activity-based costing is a great way to do this. Let's go through the example. Here you can see the sales from each product. This was not given to you, materials, labor, and shipping from each product. And this breakdown has not been given to you yet until this point. And it's sort of a side effect, but you got to figure out, of course, you would need to figure out how much direct materials, direct labor, and shipping goes into each product. But what we do want to know also are the other three cost pools: customer orders, product design, and order size. So we calculated that already in step 4. And customer orders for standard stanchions was 192. Product design was 0 because we didn't have any designs for standard stanchions. And order size was 332,500. For Custom Compass, if you remember, customer orders allocated $128,000 from that cost pool. Product design allocated $252,000, and order size allocated $47,500. So total cost of making standard stanchions, this would be materials, labor, and shipping, plus the three cost pools that we're dealing with here, would be $1,753,750. For Custom Compass, it's going to be $589,500, which adds up to $2,343,250. We're just looking at the totals here also. I made a column for the totals. So the product margin for standard stanchions is $2,660 minus $1,753,750 or $906,250. $540,000 minus $589,500, and you should be like, wait, this doesn't look good. And we get a negative product margin on custom compass housings. Now, again, whenever you're looking at these things, remember that it's one thing to add this up in a nice spreadsheet. It's another thing to look at it and say what's going on. And when you look at this and to see what's going on, you're like, wow, we're losing money on custom compass housings. We make a lot of money, $906,000 on standard stanchions, but we're losing money on custom compass housings. And you can see here that overall profit is so far is $856,750, but we have not applied yet customer relations and other cost pools. So customer relations cost pool, if we go back to step 2, you remember that we figured out that customer relations is $367,500. So I got to write that here. And other, if you remember, back from way back when, was $490,500. So net operating income or loss is $1,250 is the loss. And of course you want to interpret this. We're going to do more interpretation in a little while. We have a loss of $1,250, and you could say that if you eliminate custom compass housings, then that would eliminate the loss, right? Because if you eliminate this, we really know, right? We wouldn't have all these product designs, which are pretty expensive. We would have a lot fewer customer orders, which are also pretty expensive. So if we just eliminated this entire column, then our product margin would go up to $906,250, and then we would have another $49,500 more in income. So we would be making money instead of losing it. And this is a much more reliable measure of that than variable costing or absorption costing, which we saw in the previous chapters. Another thing you can do here, and this would be part of step 5, is to compute your margin by customer. The book doesn't really give you a lot of background to do this. It just sort of springs this on you, but it's good to look at. They looked at one customer, Windward Yacht. And for this customer, they looked at what they bought, what the sales were from those sales, obviously, the materials, labor, and shipping. And they probably had, I think the cost per customer order was, it looks like they had 3 orders. They had one product design. They had a certain number of order size based on machine hours for the number of units they sold. And then they have customer relations, which we said back here was $1,470 a customer. Every customer costs you $1,470. So looking back here, you can see there's the $1,470 because this is one customer, so it costs us $1,470. And then you figure out sales are $11,350, cost is $10,651, so your customer margin is $699. That's a good thing to know, right? It would be nice to know how much money you make on each customer. So how does this compare with traditional costing, absorption costing, if you will? Let's compute again. We had an absorption costing income statement at the very beginning, and that also showed right here that we lost $1,250. Now, in fact, it may be different. In this case, it happens to be the same because of how they set up the problem, but if you had a more complex problem, you would actually get a different loss or income. And that would be due to inventory levels. So we broke this out and figured out, based on our analysis here, that Standard Stanchions is making $906,250, and Custom Compass is losing $49,500. Let's do the same analysis now using absorption costing, which is what companies have to use for GAAP. So the predetermined manufacturing overhead rate, if you remember, this was going to be total manufacturing overhead estimated divided by the estimated number of machine hours during the period. So that would be $1 million with manufacturing overhead. That's given to you over here. Remember, this is just manufacturing overhead. It's not total overhead. It's just manufacturing. And 20,000 machine hours. That came from... somewhere it said the number of machine hours. And here we go. Here we were expecting 20,000 machine hours. So that's gonna. So instead of using these 5 cost pools, we're just gonna have manufacturing overhead, and we're gonna allocate it according to machine hours, because that's the old way of doing it, which is how everyone still does it. $50 a machine hour. Every machine hour gets $50. Okay, so Standard Stanchion has 17,500 machine hours. $50 each is $875,000 worth of overhead. Custom Compass has 2,500 machine hours at $50 each. That's $125,000 manufacturing overhead total. That adds up to $1 million. Good, because that's what we're trying to allocate. All right, so now let's break up the income statement. This is our income statement here, and we're trying to break down our overhead and everything else. So this is the sale of each product. I just took this from the previous section. And materials and labor are the same as the previous section. Manufacturing overhead, based on this allocation, would be $875 for standard stanchions, and it would be $125,000 for housings, adding up to $1 million. So I got my cost and my profit by product, or product margin, for standard stanchion would be $615,750, and Custom Compass would be $258,000. So the total cost would be $873,750. Would be the total product margin, excuse me. Now you subtract the selling and administrative costs, which we don't allocate because they're period costs, if you remember, from the previous chapters. And then you get a net operating loss of $1,250. So this gives us a very different result than activity-based costing. Activity-based costing told us that we're making a lot of money on stanchions and we're losing money on Custom Compass housings. Traditional absorption costing says product margin is only $615,750 on standard stanchions and $258,000 on Custom Compass housing. So according to traditional costing, that would tell us that Custom Compass housings are profitable. ABC would say that they're not. And what you got to ask yourself is, which one is more reliable? Well, it's not so reliable to allocate machine manufacturing overhead based on only machine hours. I would say it's much more accurate to have all your different cost pools and to allocate the costs according to those, and not allocate customer relations and others, because we're determined they're not really allocable. So ABC should be a more reliable measure, and therefore, to that extent, absorption costing is misleading, because this report, which is what you would receive from accountants, would tell you that Custom Compass is housings is profitable, but because of that 400 designs, let's look at specifically what's making them so unprofitable. This product design element here is really what's doing it. This product design element, which is completely ignored here, is driving up the cost of Customer Compass housings. And what you could do is you could eliminate Custom Compass housings, eliminate the entire product design cost, and then your company would be much more profitable. So there's several reasons why product margins for the two costing systems are different. Traditional costing is going to allocate all your manufacturing overhead to products, and it's going to ignore non-manufacturing, of course. And ABC is only going to assign overhead to those products that are sort of consuming, using, causing, driving those costs. So in that sense, ABC is going to be a little more accurate. Traditional costing allocates all manufacturing overhead using a measure of volume. Whereas ABC costing is much more flexible. Traditional costing is just going to be direct labor hours, direct labor costs, or machine hours. That's pretty much it. And it's usually just direct labor hours. Activity-based costing could use all sorts of measures, number of orders, number of designs, whatever you can think of could be used for activity-based costing. And therefore, these non-volume related allocation bases could give you a much more accurate measure. Furthermore, traditional costing is ignoring any selling and administrative expenses and treating them as period costs, even when those selling and administrative expenses are directly associated with specific products or cost objects. So ABC costing takes these into account, and it can take into account shipping costs, all sorts of other costs that would be ignored by traditional costing because they're deemed to be period costs. The really great thing about activity-based costing is that it can lead to something called activity-based management. And this company that I'm consulting with, this is something that they're working on. Activity-based management allows you to focus on improving your processes to eliminate waste, reduce processing time, reduce defects. Because once you understand what's driving, what activities are driving your overhead, you can adjust those, you can work on those activities and cut down their costs. And that, of course, is going to make your company more profitable. These activity rates that we calculate provide you with valuable clues about where there is waste and what you can do to save money and become more profitable. You can also do benchmarking. In other words, you can measure your rates against other companies and discover ways and understand where you may be able to find cost savings. Now, the whole thing here is that companies don't use activity-based costing. It's expensive and it's a lot of work. It's not GAAP also. And auditors are not comfortable with some of the subjectivity that's involved in generally in activity-based costing. So the uses of activity-based costing are very limited. But the benefit of activity-based costing is it gives you a much better idea about what's really driving your costs, and it will make you a better manager in that way because you'll know more about your company. So by all means, activity-based costing might not be used by a lot of companies, but for companies that use activity-based costing, there are tremendous benefits to be derived. So why not use activity-based costing? It's very expensive and it's a lot of work. It's a big project. This company that I'm working on, we have meetings with 30 or 40 people at a time, and they have 2 full-time people, and they have at least 2 consultants who are working for a big consulting company working full-time on this implementation. So there's a lot of resources involved, and you have to really think about what's driving your costs and how to set up your cost pools in order to do this. And there are very natural ways to do it because it tends to be you spend overhead in certain ways. So it's easy to see where's the overhead going. Okay, what's causing those overhead costs to happen? But there's also a huge danger that these numbers could be misinterpreted and lead to bad decisions. And you have to be very careful of that when you're using activity-based costing. For example, you might eliminate the custom whatever things. And here, let me show you. Let's say you eliminate custom compass housings, but you keep your whole product design team on staff and you keep paying them. Well, then you're still paying the overhead. You didn't save any money. You just stopped bringing in the revenues. You still have $252,000, and then you'll lose even more money because before you were only losing $49,500. Now you have a whole department with nothing to do that's costing you $252,000, and then you're going to lose more money. So you got to be very careful about how you use this information and use it only for good, not for evil. Use accounting information for good, not for evil. Okay, on that note, thank you for watching. If you like the video, click like. I don't know, this is getting very cheesy. And thanks for watching.